Hello and welcome to a brand new episode of the Speculators Podcast. I'm your host, Corbs, and today we got a special episode in store because it's time for another good old-fashioned mashup. Over the course of this podcast, we've had on some brilliant traders. We've covered a lot of very good topics, and what we've done in this episode is sifted through all of those episodes and pulled out some of the best topics, put them together into one episode for your viewing pleasure. Now, the topic we're talking about in this episode is one product, one time frame, one tool. All of us as traders, there's a lot of different tools that we use to find an edge in the market. There's multiple time frames that we keep our eyes on, and there's different symbols and products that we trade. So, if all that was stripped away, and you could only focus in on trading one symbol, and if you only had access to one tool, and if you could only look at one time frame, what would you choose? How would you set up that chart? That's a topic we're talking about in this episode. We're going to dive into and hear from some of the brilliant traders who've been on the podcast how they would set that up, and really getting down to the root cause of all the things we can focus on at the core. What are the most important things to you that you cannot trade without? I hope you enjoy this episode. Before we get started, don't forget to like the episode, subscribe to the channel, and without further ado, let's jump into it. I hope you enjoy.
If you were to have a blank chart, you had to trade this for the rest of your life, and you could only put one time frame on there to view things, you could only put one tool to help you make your trade decisions, and you could only trade one symbol, how would you set up that chart?
I would say it would probably be a 15-minute time frame that would allow me 20, let's say probably 20 to 25 days of data. I would put I just wrote a book about the anchored VWAP. So I hate this question because my answer isn't an anchored VWAP. Instead, it is, it's the 5-day moving average. And by the 5-day moving average, I mean the intraday 5-day moving average. So on a 15-minute time frame, it means we're looking at 33 periods, or I forgot now. But so it's a 1,950 minute moving average, basically.
Okay.
So 130 15-minute periods. And I would just trade the swings based on that. There's no better representation of the intermediate term trend than the 5-day moving average.
What about the product you trade if you can only trade one?
I suppose it would be, the SPY, I guess. I'm most familiar with that. I look at it every single day. There are good swing opportunities in there. So, and it's as liquid as you can be. So I could just keep growing bigger and trade that as much as I want without ever moving it.
Great. Now, great answers. You have a blank screen. You can only put on that screen one product. You can only trade one time frame, and you can only have one tool, whether that's an indicator or some type of a drawing or something. How are you setting this chart up? You have to trade on it for the rest of your life.
It's just going to be the 30-second chart on Sierra charts. It's small enough that I could time into it. It's large enough that I can get the price action I need. 30-second 30-second bar charts. I don't like candles. Like, they're too fat. And I like how, because when a candle closes, it's either at the top or it like inverses, like on a bar, it's always on the right, but I really don't care about open and closes. It's just thinner. I don't know. I like them. Sure. So 30-second time frame. What's the other half of the question?
You trade the ES. I'll go ahead and fill that one in for you.
One
and then
indicator.
If you only have one tool that you use, what would it be?
Is a profile considered a tool?
Sure.
Well, then that's what it's going to have to be.
Yeah, no, it's a good setup for you. It's very interesting to me, the 30-second time frame. I'm trying to get a visual. Do you have a ultra wide monitor, or are you just looking at a very small portion of the action at any given time? Because I imagine it's a very noisy chart, of course.
I would say it's noisy for people who don't ever look at it. It looks like shit.
It feels like you get that comment a lot.
It makes sense to me.
So are you just kind of looking at only, let's say, 30 minutes of the action at a time. You're not seeing several, the whole session at one time.
I can see
of
the
course,
open right now. I can see more than the open. I can see it's a normal size monitor. It's like this wide. There's 5 monitors. So charts up here. There's one below. That's the DOM. Because I use Jigsaw DOM, and then I have a 3-second auction Vista chart because it like that price action meshes perfect with the DOM, and I keep things real narrow, kind of like a fighter pilot. It's like a HUD. Less eye movement is important for me. Like I get like, can I shave a fraction of a fraction of a fraction of a gnat's ass of a second off my eye travel? I'll do it. So we got a monitor up here, and then we got one over here, and then I have a Discord screen. So there's 5 monitors, which is kind of unnecessary, but I have 2 that are the main ones, normal size. On the 30-second chart, I can see right now, I can see all the way to midnight of the 7th.
Yeah, very.
But I zoom in.
I might have been a little quick to judge the 30-minute chart. Maybe I'm one of the haters on the outside as well. The 30 seconds, sorry.
No, it's all good.
You have, let's say, a blank screen that you can put on, a blank chart that you can put on one product to watch. You can put on one time frame, and you can only put on one tool. How would you set that chart up?
Candlestick, 15 minutes, E-mini S&P 500.
Candlesticks would be your tool?
Yeah.
Oh,
go on, you can ask me why.
yeah, no, but I would have granted that to you as a given that it would have been on there already. But you would rather just watch the straight price action than anything.
Yeah. So I come from, I absolutely love market profiling. I absolutely love Delta. But when you use those, look, market profiling, Delta, and candlesticks are all just a representation of data. That's all it is. It's a pretty picture of the data. Okay, now, when you work with profiles for long enough, I can tell you what single prints look like on the candlestick chart. Okay, I can tell you what, where high volume areas are and low volume areas. I can tell you where the absorption is taking place. I can see it all on a candlestick chart now. Moreover, when I create my signals, they're all done off of a candlestick chart. So I can signal, for example, delta reversal. So where most people will have a footprint chart to see delta accumulation or delta reversal or delta absorption or elephants, I can signal that straight onto the candlesticks. Okay, so again, it's not a right or wrong way. It's just I've become so used to trading directly off the candlesticks because I kind of automated all my signals off of them. But yeah, S&P 500 because it's the most liquid, it's fun, it moves nicely, it presents lots of opportunities. And 15-minute because what I found is obviously a lot of my signals are generating, like I said, mass participation. So I need to know where there's a sufficient amount of participants playing in my direction, because obviously if I'm short, I want them on my side. And what I found is that 15 minutes is noisy enough that I'm getting signals, but it's also long enough that it is signaling actually mass participation. Okay, if you go too short, what I found is if you go 1 minute, you're gonna run foul of many algorithms and lots of noisy kind of price action. Whereas if you go too long, you're behind the move. Okay, so think of a Goldman Sachs. They, if they enter the market and I'm looking at an hour chart or 2 hour chart, the reality is I've probably already missed the move. They've already executed the order. So that's kind of how I've landed on 15-minute charts. And again, it's not about 15-minute being right. It's not about 5-minute being right. It's about what are you trying to do as a trader? What's your approach? What's your contextual understanding? How do you feel you can apply yourself to the market? And then take the charts and set them up that way. Okay, I see too many traders that put charts, one of the funny things, go to any prop shop, any prop firm, and they all have 8 screens. Okay, and you'll look at the 8 screens and 4 or 5 of the 8 screens will be charts. And I'll look at them and go, why have you got so many charts? Like, you can only look at one market at a time. Why do you have so many charts? And there'll be the usual reasons. Because I need to keep track of this and I need to keep track of this. And when you kind of pull them away, you say to them, well, let's look at how much energy and thought you're giving to another market and how much confusion that's creating. And by the end of the conversation, they'll go, you know what, actually, I don't think I need that many charts. So yeah, I think that just comes back to that same sort of idea we were talking about earlier about keeping it simple. Okay, the more simple you keep this, definitely the easier it becomes. And I mean easier in terms of understanding, in terms of developing, steepening the learning curve. I don't think trading ever becomes easy. I think that's it's a wonderful game in a sense that it doesn't matter how long you've been doing this job for, you are going to be learning for the rest of your career. My North Star has always been, the consistent pursuit of progression. And that's whether I'm doing triathlon, whether I'm being a dad, whether I'm being a trader, whether I'm being a husband. I always want to keep progressing. And trading is no different. Okay. You're always going to progress. There is no limitation to how good you can become, other than the limitation you set for yourself. So it just depends on what you want. And not everyone wants that. Not everyone, some people go, oh, you're a bit obsessive, you're a bit crazy. Why do you want to go for a run at 5 a.m? That's stupid. Why do you want to cycle 180 Ks for fun? Well, because that's how I understand life. I understand it as, in pursuit of progression.
You're involved with, quite a few different things as far as the investments, the swing trading, the regular trading, different markets, maybe options, maybe futures. If you had to look at one blank chart, and on that chart, you could put one product, you could put one time frame, and you could put one indicator or tool, how would you set that up?
No, it's so easy for me. It would be the E-mini S&P daily with Bollinger Bands.
Interesting. Something I think that's very interesting is what is your thought process, or what is your relationship to indicators in general? Are they an active part of your analysis, or are they an active part of your actual trade ideas? I want to take a quick break from the episode to talk to you about TradeAc. If you're on the trading journey, and if you're really about this life, you know that it's not easy. And if you're feeling lost in your trading, maybe you're not getting the results that you want, maybe you're lost and you don't even know if you're doing the right things and if you're heading in the right direction. Don't worry, TradeAc's here to help. From our flagship product, the Profile Method, all the way to our entry-level product, the Profile Formula, there's going to be something for everybody, regardless of where you're at in the trading journey. TradeAc is my company that I help start. All of the content that I create, all of the trading that I do, it happens right inside of TradeAc. So if you're ready to take your trading to the next level, click the link below. You can get started today. Now let's get back to the episode.
Well, yeah, I mean, they're a huge part of what I do, because why I like indicators so much is because it's proof. It proves me something. What did the market do based upon this, the information you got from this indicator? Let's talk about, an indicator I use a lot. And it actually came to me later in my career, and I credit Brian Shannon for this, Alpha Trends. He's a friend of mine, and he brought this really more to my attention later in my career, and it's something I use regularly. It's the anchored VWAP, volume weighted average price. For years, I used moving averages alongside Bollinger Bands. I would use some MACD, some RSI, and I would always use order flows like cumulative delta, but I never really used a VWAP. So what's great about a VWAP is, and the reason why indicators are so important to me, like a VWAP, where are we relative to volume weighted average price? And it proves to me, if it's above it, that the market is stronger than the volume weighted average price. And I know that sounds so stupid simple, right? But mentally, I look at that and say, the market is giving me an indication that it's holding above volume weighted average price. And so it means something to me. It means to me that the market is outperforming the volume weighted average price. And so I've learned in my career that you want to be long strength, you want to be short weakness. And I know a lot of people will say, well, buy the dip in stocks. That's totally different. In my portfolio long-term, I try to buy some weak stocks because I know I'm going to have a wider stop. I'm going to keep them. But it's a totally different mindset. It's not the same as an investment as it is for a trade. With a trade, I try to go with the outperformance or the underperformance. And so therefore, indicators help me identify that. Why I like Bollinger Bands. Bollinger Bands show you if volatility is expanding or contracting. If volatility is contracting, it's a two-way tape. Bollinger Bands are coming in. It's a two-way tape. You're looking at mean reversion. When Bollinger Bands are open and markets are going, in one direction, volume is expanding. And so in my mind, why would I want to step in front of a trade that's above a VWAP with a mouth of the Bollinger Band going open? I only want to be with that trade. Right? And then you add another indicator like an RSI or a MACD. What is the momentum telling me? Is it overbought? Is it oversold? Can we get near overbought? How long have we been overbought? And so the information there tells me what's happening in the market. And so indicators, they help me understand the environment, and they keep me from doing things against trends, and they keep me from doing things, or they actually should rephrase that. They keep me from doing things against what's working, and they help me put myself into trades that are working.
Let me ask you this. So you have a lot of markets you're watching, and you sound like you have some pretty simple charting setups at least. But let's say this. You got a blank chart, only one. You can put one pair that you watch. You can put on it one indicator, and you can set it up with one time frame. How are you crafting that chart?
Okay. Ooh. So one pair, I'm going to choose the dollar yen.
Oh.
And the reason I'm choosing the dollar yen is because I can attack it both. I can attack all the charts the same from a technical perspective. I'm a little bit stronger with the dollar yen from a fundamental perspective because Japan tends to come out and be blatantly honest with their monetary policy and what they want to do or not do. So it's a little bit easier to kind of judge that from a fundamental perspective. And historically, again, I don't do a lot of trend trading and trend following types of moves, but the big ones that I have had have come on yen crosses, with the dollar yen being one of the most frequent ones. So the dollar yen would be one because it gives me that ability for that home run trade, which is different than most of my trades. Indicator, oh man, I'm gonna tough. I'm gonna go with the RSI. I was between the RSI, relative strength index, and the ATR, average true range. The reason I'm going to take the RSI is because I can easily, well, it would take time, but I can calculate the average true range by hand, need be. The RSI, you got me on that. I know how it works. I am a student of it, but as far as doing the math on a regular basis, I'm not interested in that. So I'll take the RSI. I'll do the ATR by hand. Was there a third part of the question, or was it just indicator?
What time frame would you set the
time
candles
frame? Time frame 4 hour. 4 hour chart. It's a nice blend between the daily, which gives some very quality signals. I'm a believer in the higher the time frame you go, the more quality the signal there is. There's less noise. The hourly is more intraday. I would have to pay more attention to the hourly. So for me, it would take more of a time sacrifice. And I'm big on time and developing freedom through time, or time freedom, I should say. So the 4 hour, which is my favorite time frame regardless, is a nice blend of a little bit faster and more in depth than the daily chart, but not as fast and busy as kind of an intraday chart, or definitely a day trading chart. So dollar yen, relative strength index, 4 hour chart, let me have at it.
I would imagine that you have a lot of products you're trading and potentially maybe multiple type indicators that you're looking at. Let me ask you this. You have a blank chart. You can only put one product to watch. You can only have one time frame, and you can only use one tool or indicator. How are you setting it up?
Okay, I'll use the GBPUSD, British pound versus the dollar, because that pair moves in a very technical way. It just respects a lot of levels. So if I can't use indicators, I have to use support resistance levels, something. GBPUSD tends to respect those very well. I would use the 1 hour time frame, because if I can't use multi-time frame, I think it's really hard to trade on the lower time frames, 5 minutes, 1 minute, and so on. So I would go a bit up in time frames, maybe the 1 hour, the 4 hour charts. Look for technical levels. Really strong levels on a chart, and then I would use an RSI, for example, with the standard settings, and try to look for either overbought, oversold as a trend following strategy. So when we approach a strong level, we break out of that level, and then the RSI shows overbought for a long trade. That's a good signal in itself. You can do that. Or if you get divergence on the RSI into that level and price flattens out, you can look for a reversal trade. You probably wouldn't get too many trades per week on a 1 hour chart, but if you know how to pick your levels, that could very well be the only strategy you need.
So the way that you're trading, let's say you have a completely blank chart and from now on, you could only trade, you could set up that one chart however you want, but you could only trade one product, you could only trade one time frame, and you could only put one tool or indicator on that chart. How would you set it up moving forward?
Tesla.
Okay.
5 minutes.
Okay.
One indicator only.
Yeah.
J lines, which is exactly an expansion number, Fibonacci 72 and 89. So it's like cloud.
Is that a thing you created?
Yes, that I discovered 2004, 2005, trading mid, so Italian futures over here in the Italian market. And I was seeing is something that repeats over time, this 89 and 72. And if I can, also order flow. So reading the price action that way, that will be my way to go.
So let's say this, you have a completely blank chart. You could put one time frame on it. You could put one product on it, and you could use one tool. How would you set up that chart?
I would set up a daily S&P.
Okay. So you would go daily time frame.
Yes.
The S&P, I'm assuming candles.
Futures, yes, candles.
And then no tool at all? Opt out of the tool?
No tools.
Wow.
I don't have any indicators on my charts. I don't.
How about Fibonacci?
VWAP.
VWAP. Nice.
Yeah.
I was going to go with to help you with some of your levels, the Fibonacci, but I love that you chose VWAP. Great. Okay, very interesting.